I'd like to introduce Jenna Wright, Managing Director of LMAX Digital, to talk a little bit about the company's decision to move into the space and talk about some of the key forces at work. Hi, welcome Jenna. So you've been at LMAX Group for a number of years, working in the traditional banking space. How did you launch LMAX Digital? What were the reasons for going into it?
Yeah, so LMAX Group, we've been operating FX exchanges around the globe for for over a decade now, out of New York, Tokyo and London. In 2017, we were approached by a number of our non-bank institutional clients who were becoming pretty active in the crypto space, trading on a number of the retail exchanges, but really looking for somewhere where they could risk reduce, where they could trade out in size and essentially trade with like-minded participants. So given that was what we were really doing in the FX space, we took that away and had a look at how we could migrate that into crypto. And to be honest, it was really very much the same. So it was exactly the same software. We just needed new hardware to generate a fifth exchange, which we decided to go ahead with. So LMAX Digital was launched in 2018 as our fifth exchange, 4 being FX from previous, and then a spot crypto digital asset exchange.
And post that launch in 2018, what's the sort of key developments that you've seen and the sort of the new products that you've rolled out to help managers trade crypto?
Yeah, so it's actually been our fastest growing exchange within the group. Profitable within 5 months. The uptake in crypto has been phenomenal. A lot of the exchanges out there cater to retail clients. We've decided only to cater for essentially the market makers that are making those retail clients a price, and then with time, the banks, the funds, the asset managers. We're very aware we're still very much in a private investor market. It's still very retail out there. However, the dynamics and how things have changed in those short 4 years have been significant. So if you think back to when we launched in 2018, we went to our banks who trade FX with us, 35 of them, and we offered them the crypto feed. You know, we were very excited by launching a crypto exchange, and every one of them looked at us with a no thanks, not right now, let us know how you get on, and let's speak again in a year. If you fast forward to where we are today, a third of those 35 banks now take our crypto market data. So on the bank side alone, things are really moving. There are obviously still a few roadblocks for them. A lot of it is around regulation, but they are working out how they trade or how they get access to crypto products. On the non-bank side of things, we've moved from onboarding quite a lot of crypto native funds, so smaller funds, and now we're starting to have conversations with large traditional funds, corporates, retail brokers. There's a real range of client types, but we're really focused on the institutional side of clients.
And that decision just to focus on institutional business and not take retail business, I mean, presumably that's helped foster your reputation and helped you with the growth, particularly at the moment where so many mature pre-existing management firms want to move into the space.
Yeah, absolutely. I mean, to cater for tens of millions of retail users, you're probably a different body to what we are. What we're about is having a small number of clients that we look after very well. We have that personal relationship manager experience, and these small subset of clients are trading in quite large, significant volumes. But the main thing is that we're providing that institutional grade infrastructure for them, so that ultimately, if Bitcoin was to fall by $10,000, which it can do, we're still standing, we're still operating an exchange. And I think that's the real difference. If the institutions are going to come and trade crypto, that should be first on their list. Do they have a venue where they can, they need trust, they need transparency, they need 100% uptime, and that's really what we've been focusing on. Great,
thank you. And then the difference between institutional business and the crypto natives, in the audience today we have an even split. Do institutional businesses who are looking at moving into this space for the first time, potentially either bolting it onto a global macro strategy or launching something new, do they require a lot more hand-holding and assurances? I mean, how do you get them comfortable with a space that's obviously very interesting to them, but is still seen as risky?
Yeah, I think so. I think that traditional fund managers will expect a fund to separate out their trading and their custody. So today, bearing in mind the client type we're facing, we very much custody and allow execution, because an HFT, for example, doesn't necessarily need to pay a custodian, and therefore they'll just leave funds on exchange. With a fund, it's quite different, and they will need to understand the safety of the assets. And the safeguarding of crypto is just as important as the venue that they choose to execute. So we do a lot of hand-holding to that extent, help the client understand the venue, but help the client understand their custodian options. And that doesn't necessarily need to be with us at all. There is a network out there of custodians, some more traditional than others, but a lot of crypto native custodians as well that are trying to really grow in the market. I think there are probably a few bigger names that could enter. I mean, if you think about the top 5 custodians out there in other asset classes hold $100 trillion in assets. If you think about the size of crypto today at 3 billion, it's still very small, but there's so much for them to gain, and there's so much for crypto to add to traditional custodians, that it's an interesting dynamic. Those names coming in to offer custody for crypto could really grow the crypto market if we get some trusted counterparties in the custodian space that start to custody crypto. Could be very interesting for the crypto market as a whole in terms of it growing from here. Revenues and volumes in 2021 were 5 times what they were in 2020 on the crypto side. Not quite the same on the FX side. So we're definitely seeing growth on the crypto side, and we're looking to expand all things crypto this year for the group.
Tell me about those expansion plans. What else are you planning to roll out? Is it just more customers, or do you have sort of bolt-on modules for your existing customers as well?
So we're definitely looking to expand into a number of different coins, and in addition to that, the core focus this year for us will be the launch of a crypto futures product. So today we've been a spot crypto offering only. We are aware, though, there is opportunity for traders to trade arbitrage, the basis trade. It's a pretty common trade out there for traders in the crypto space. So for us to offer both under one roof, there are some benefits there for the clients. And also, look, today we know that futures trades more than spot, so it will be pretty limiting for us to only continue to offer a spot product. And we think that the banks in particular, they can trade a future right now, but can't trade the spot product. So in the short term, if we offer them a futures product, it allows them to engage with us more than just taking our market data, which is pretty much the stance for the tier 1 banks today. So we should be up and running in Q3, and then by Q4, we aim to have that as a 24/7 product, which hopefully for institutions will be something new to the crypto party.
Yeah, that's interesting. A lot of the funds in the audience today are already trading futures in the crypto space, or want to as well. Yeah. So it's a great additional service to bolt on. In terms of the managers that you're dealing with at the moment, we characterised them earlier as a split between the crypto natives and then sort of moving gradually into the institutional space. How rapidly is that happening?
It's slow. There's no denying that, but I would say there was 0 in 2018, and now we're talking to a decent amount. And there's some very big names that are talking about crypto, which is very exciting. For us, there are probably a few pieces to the jigsaw that need to be fixed for the real funds, the real big money to enter. Credit intermediation as one example. Currently, the market's pretty inefficient. A client has to have funds across a number of different exchanges with no central clearer to manage that credit piece. If we get a bank or a prime brokerage type solution in play, traditional funds might be able to just leverage off credit relationships they have already and just apply that to crypto. I think items like credit intermediation will add a lot to having traditional funds just being able to open up a bit more, rather than the slowly approach that we're seeing at the moment.
And you mentioned the jigsaw, because it is like a jigsaw, because there's all sorts of different pieces that are missing or sort of partially absent sometimes, whether it's regulation or uncertainty around tax. In terms of getting a greater adoption rate, particularly from, I suppose, mature management firms, what else has to fall into place? What else are you looking forward to at LMAX?
Market access is still, because it's retail driven, it's still pretty inefficient. So institutions need frictionless and efficient access. So hopefully we're just one part of that, but the market needs to open up a bit. In terms of banking, it's twofold really. It's the banks trading, which we've spoken about, but it's also the banks performing that credit piece, leaning onto the sea, but also banking institutions that are trading crypto. So right now you bank with a crypto-friendly bank. Now we could find ourselves where a traditional fund, has a larger balance sheet than that crypto-friendly bank. We need your tier one banks to come in and perform that service, because our funds, our mutual clients, they have to feel comfortable that their assets are safeguarded, whether that's fiat or crypto. Mm-hmm. So the custody piece is one, we spoke about that earlier, but also the banking, right? They're just unlikely to bank with a crypto-friendly bank that, you know, is probably unheard of in the non-crypto world.
In terms of your observations on the space, you know, one of the things that obviously has been clear from this year already, even last year, how volatile it is. Does that affect market entrance? I mean, do people hold off, or is that actually an appeal as well? Because trading that volatility, if you're good at it, you know, the returns are there. So I'm just wondering, in terms of the funds that you're working with at the moment, you know, how are most of them trading these assets, and has there been a shift over time as well?
Yeah, so it's twofold. It's exactly what you said. I think you have the hodlers, and part of funds will always have that strategic element of buy and hold. But I think the active funds today are trading the volatility. I mean, it's a great asset class for that trade. So it's really about risk appetite. Does a fund really just want things to level out a bit, which is probably a few years away before we get there? Do they want to... I mean, everyone wants access to crypto. So the funds that are not trading today probably are investing and taking a VC approach to crypto, because there's very few funds out there that are not doing anything in crypto. So it's just about deciding on where you fit and what your risk appetite is. So do you just want some access to crypto via a firm that's linked to crypto or has technology involved in crypto? Do you want to hold it and be in it for the long run? Do you want to trade it? And then tons of options. But today, I would say the funds that are trading with us actually have two strategies. One is the buy and hold, and then they will add to that as they see opportunities. And then the other is the active, sometimes a market-making strategy, sometimes just a trading of the volatility.
Great, thank you. And then underlying or supporting those funds, you have their investors as well. I don't know if you have a look through, if you can see if there's a gradual shift in who's investing in those businesses, and just making the space more institutional. Are you seeing the arrival of investment consultants or more institutional investors, going away from sort of friends and family to more sort of either family offices or endowments or foundations?
It's actually a mixed bag. So funnily enough, we're doing a ton of things around family offices right now. It's a hot topic for us. Families are quite nervous. So what I have found is a family with youngsters that are part of the day-to-day decisions tend to be very interested because they just happen to have bought some Bitcoin on a retail exchange for fun anyway. The families that don't have that as part of their strategy tend to be very much of the mindset, we're comfortable with what we know, we'll work out how we understand more before we make allocations. But it's coming, it's just an educational piece.
Great, thank you. And one quick question before we wrap up. How do you expect things to develop over the next 5 years? Because it's pretty fast flowing at the moment,
Yeah.
Lots of ups and downs, lots of unknowns out there as well. But from an LMAX perspective, it'd be great to hear how you feel things will pan out.
We think we're just getting started, actually. There's a lot more to come. We've learned a lot in the last 4 years. We always say that 5 years of normal life is just 1 year in the crypto space. We're incredibly excited as a group, and I think actually in the next few years the sort of concentration of volume will move from FX into crypto for us as a group.
Great, thank you. Thank you, Jenna. And if anybody in the audience would like to contact Jenna or her colleagues at LMAX, please let us know, and we're very happy to pass the message along. Thank you.